One of the questions I get is, what is your best trading system? This is one of the best trading systems, and I'm going to go over the details of this. This is a report without slippage and commission. I'm going to add slippage and commission, and I'm going to show you how to back test this. The data is set back to 11/3/1997 when the beginning of the E-mini S&P. Here is the equity curve. Really nice equity curve through September of 2020 was doing really well for us, and it's developed way back here, and it's a strategy we've had for a while. Look at the periodical returns, even with that drawdown in December hitting a worst case drawdown. It's up 92.6250, and with slippage and commission, once you add slippage and commission, this becomes the worst case drawdown. So this is close, but this is worse when you have the slippage and commission. So this is no slippage and commission. What does this look like with slippage and commission? Answering a question on how to test with limit orders. This enters on a limit order, and want to show you how to back test this. So if you double click, open this up, you want to click on properties for all, and you add slippage and commission, $12.50 per trade. That's what, when I average this out over time, I see $25 round turn slippage and commission, $12.50 per trade, which is $25 round turn. Back testing in real time trading, I typically select cancel and replace entry limit orders within 0 seconds. If you're trading the micros, especially the NASDAQ or gold micros, we've backed off of this and unchecked this, but for the E-minis and most futures, we check this. We cancel and replace. We don't want to miss the order. We back test it to fill the order if it touches the limit price or better. So in automation, you want to make sure you take that trade. You don't want to miss that trade that was in the back test because it did not trade to the limit or you did not get filled. So the back testing here is to fill order when trade occurs at limit price or better. And then the question is, should you back test it with this? We're going to do both. Fill limit order here. You only show a signal if it goes through that limit order price. If you do that, then you can uncheck these, and you can typically reduce your slippage. So we'll just look at an absolute worst case scenario by looking at this with check this, make sure it trades through the limit price, and we'll still use the worst case slippage. This is the slippage that we use when we cancel and replace, and we use this. So we're going to look at the worst case scenario and show you the results of this trading system. So these are the results with $25 round turn slippage and commission and requiring the price to trade through the limit. You see 87.3750 drawdown, $30 average trade profit with that $25 slippage and commission. We're requiring the price to trade through the limit. You cut the total net profit in half and nearly double the worst case drawdown. Here is the equity curve, a lot more choppy once you add slippage and commission. Now this becomes the worst case drawdown back in 2018. In February 2018, that's the worst case drawdown. And so these are the results. Let's look at the difference between the long and the short trades. You see long trades are only $20 average trade profit. Short trades are $43.50. So could be a better strategy to trade on the short side. But overall, I want to address this. This is a good trading system, and this is what a real world trading system looks like. You don't have straight line equity curves once you add slippage and commission. Once you deal with a strategy that's not optimized, it is choppy, and this is the reason why we select portfolios to trade. We don't recommend trading just individual strategies by themselves. What are you going to do in this time period right here? Pretty much sideways for a very long time. And what about this time frame right here? It's sideways. This time frame right here is sideways. And even in reality, this whole time period is sideways. So you get a good trend here, a good trend here, and a good trend here at the start. So sideways period here, and really no net gain in these windows right here. So you need other strategies. You need to diversify your portfolio. It's hard to find a strategy that works in every type of market environment, but you can find individual strategies and you combine them in a portfolio. And this one is in our 50K portfolio. And I want to show you, we're having an upcoming webinar on January the 27th. That is next Wednesday. The link is in the bio. We're going to talk more about this concept, combining trading systems into a portfolio. It's kind of a starter portfolio for a $50,000 automated trading systems portfolio for the futures markets. If you want to do more active trading, you can get your spot, and we will have that webinar next Wednesday, January 27th.